What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Tesla stock, ticker symbol TSLA, on a variety of time frames in anticipation of the next trading day, Monday, March 11th. All right, guys, Tesla stock here on Friday finished the day down $3.31 a share. That's minus 1.85%. Listen, it is down about another 36 cents here after hours. As always, take a look at this. See that volume on the after hours movement? If you're watching this on a phone, you likely are having trouble even seeing that. Stocks, even of this size, even blue chips, believe it or not, are incredibly easy to bully and pump, for that matter, in the after hours. So you have to take it with a grain of salt. That is, of course, unless there is a business-specific catalyst that typically drives volume, typically matching or exceeding what was, present in maybe the intraday volume, maybe in the afternoon or so. So that being said, let's get started here by taking a look and doing our daily ritual, the volume profile analysis here on the 5-minute chart, which I think is by far the best time frame to do this on. Listen, if you have not done so already, by the way, please subscribe to the channel. I greatly appreciate it. My goal on Friday night was to have 4K by market open Monday. I mean, you can see we've already blown that away. Thank you guys for jumping aboard. And I'll continue here to do my best to provide you value every day. Also, while you're listening, don't forget to cast your vote. Comment the ticker that you'd like to see me cover on Monday as the wild card stock. Every single day, I take a poll in the comment section of that day's batch of videos, and whichever ticker is mentioned the most in the comment section, I cover as the wild card stock the next day, the next trading day. So in this case, that'll be Monday. So head down to the comment section, comment your ticker, the name of the company, whatever, and that will count as your vote. So here on the 5-minute chart, first of all, we got a lot of good consolidation for the last 2/3 of the trading day at least. So really the move that I'm interested in looking at the volume on is kind of off the open, and then this fade, right, that really led into that consolidation for the remainder of the day. Now, what are we looking for, right? Well, I'm looking for obvious changes in volume, but they have to, of course, correlate with the obvious move, the most obvious move, or moves, in this case just one, in stock price, which is this here. But again, the part that most people miss is that this has to be contextual, or I should say out of context, for time of day in order to be even worth looking at. So for example, to explain this really clearly, what I mean by that is, if on this downside move, if on this fade, we saw just tremendous bearish volume, meaning high volume on the red bars, on the bigger red bars especially, and it was consistently high on those, and then maybe on the green bars that break it up, we saw big drops consistently in volume, and then big consistent higher volume on the red bars, and then big drops in the green volume, and it has to be out of context for that time of day. Typically, we expect kind of that U shape, right? Which we kind of got today. The volume held on a little longer than is typical, just for any stock's average volume profile on any average day. But I got to be honest with you guys, this one, bears, I wish I had some better news for you. For me, this is just, there's no definitive profile analysis here really to be done. There's nothing sticking out like a sore thumb that says, yes, the bears really came out of the woodwork and the market really agreed with an outsized sample size that Tesla belonged lower on that move, and that's very definitive. It's just not really there. It's very contextual, actually, but interesting to look at nonetheless. I think it's very important to do a volume profile analysis because it really gives you insight into something real. Okay, like what was the sample size of the market that actually drove that move? Because no move, if you had a downside fade and then a full recovery, if the volume profile is very different on those, then those moves are not created equal, right? They're actually incredibly different, even though you end up at a net neutral point. So all that being said, let's move on here and take a look at the psychological self-fulfilling prophecy levels that I'm going to pay attention to, starting with the 30-minute chart. Okay, of course, I have the most commonly used indicators. That's what makes this psychological and self-fulfilling. The 200 period and the 50 period. And by the way, that's my belief system around TA. You guys know that. And I wouldn't want it any other way, right? If that weren't the case, probably wouldn't be watching this video right now because I probably would be in a different line of work. Now, we have quite a bit to talk about on Tesla in terms of levels, but let's just start with the 30-minute. We'll get to the other things on the daily. On the 30-minute, on Thursday, we reclaimed, after struggling to reclaim the 50 period, the white line, on Wednesday. Thursday, we reclaimed it intraday through the close, which was good to see. However, we gave it up again on Friday, intraday, on, some considerable volume, which makes that a rather definitive downside break. It wasn't below average volume, okay? So come Monday, this is really simple on the 30-minute chart. Bulls, ideally I would want to see, and it's not just because of the level, it's also because of the beginning of that channel that we're going to discuss here in a second. Bulls, I want to see a reclaim of that 50 period at least. It's only a 1.5% upside move away. I would love to see a break upside through there on high volume, a lower volume retest of that 50 period on the 30-minute, and then a high volume pull away to confirm that break and hold. All right, now ideally, of course, you would see a close still above that level to confirm that pull away. Right, not just like a 10-minute move intraday and then a big fade. And bears, you guys, because I'm always going to give both sides here, I have to remain as unbiased as possible to do any kind of what I think is a helpful or real analysis. It's always important to understand, I think, the other side of the trade even better than your own peers. So bears, what I would be looking for in your shoes is going to be a test. I don't care if it's low volume, average volume, a little bit higher volume. All I care about is a high volume rejection off that 50 period, heading back downside. A big sample size of the market comes in and says, hey, we're not ready to reclaim that level in the short term here. Now let's take a look at the 4-hour chart. And you can see here that 50 period and the 200 period, those are both above 190. They're not incredibly relevant in the very, very short term, but I'm always paying attention to the 4-hour, whether it's in play or not so much. What I want to see occur if I'm a bull is I just want to see, the 200 period is going to be less reactive day to day, but I would love to see that 50 period start to flatten out. Just stop coming lower, stop adding psychological barriers lower and lower to help out, one factor in out of many to add some help or give some help to the bears. So if I'm a bull, I wouldn't mind to see that flatten out. Bears, you want the exact opposite. You want this 50 period as aggressive as possible coming downside. Again, that psychological barrier moving lower and lower and lower, making it potentially a little bit more difficult for the stock to reclaim what it has lost in the last week or so. Now, let's move on to the most important chart, and we have a lot to talk about here on the daily with Tesla. So, this 177 so that line at 177.40, I have that drawn there, but we've talked a lot. Again, if you're new here, I'll explain. We've talked a lot. That line to me represents the incredibly crucial range level, range on Tesla of 177.50 to 180. That range has been a huge level lately of support, but it has been a huge level on Tesla, and I've had that drawn for quite a long time. Now, you'll notice on stocks, you'll see psychological levels that turn into technical levels, maybe like $200 a share, right? That makes a lot of sense. But then you also have maybe a more interesting thing that occurs where you have just raw technical levels that occur for whatever reason. And then those, once they really form, they turn in to both technical and psychological levels because they're so obvious on the chart. And that's what we have here with the 177.50 to 180 range. So listen, bulls, come Monday, I would be thrilled as a bull to see a reclaim of $180 a share and a close above 180. I'd be thrilled. Not just because it's a green day, like whatever, right? In the short term, okay, close above 180. It's great if you own calls that expire in 2 days, right? But the reason I would be happy about that is not just because it's a green day. It's because we're getting up out of that range completely. We're still close to it, but just closing up above and showing strength and showing that, hey, we're still going to hold this 177.50 to 180 range as a support level. Bears. The bears in terms of that range have a little bit of the upper hand, don't they? Because the stock's already below the bottom of that range. It's below 177.50. So bears, any retest of 177.50-ish, you would love to see a hold as of the lower end of that range as a resistance level, right? Any retest, a high volume fade downside. Okay, here on the daily, we're always looking for the most obvious story. And listen, that channel is the most obvious story. Okay, now implied volatility, it is sitting a little bit higher in that range. So understand that the higher IV goes in relation to your intended trade time frame, meaning like the time frame you plan to hold contracts, you look at the IV of that particular security itself. You can't compare IV on Tesla to IV on Nvidia, for example. It doesn't work that way. So you compare the IV level on the security to itself for the intended trade time frame, right? What I mean by that is if you're looking to hold calls for 3 months, you want to look at IV for the last maybe 2 to 4 months. Okay, where does it sit in relation to that? You're not looking at IV in the last 4 years if you're looking to hold calls for 2 weeks. It's not really relevant. Or I guess contextual is kind of like the word of the day. Every day is the word of the day around here. But IV is sitting a little bit lower compared to the last few months here a little bit higher. IV is sitting a little bit higher in the range compared to the last few months here. So understand that the higher IV goes, the higher the potential risk for IV crush. Okay, so just understand that if you own purchased calls or puts or are looking to buy some. All right. Now, my favorite part of every video, let's take a look at what was the options traders' bias here on Friday as they positioned themselves into the weekend heading into Monday. Okay, we had 2.4 million total contracts traded. That's 1.46 million calls and 964,000 puts. So we are seeing a pretty heavy call side bias here on the overall call put ratio from Friday here on Tesla. Now, if we break this down by time frame, which I'm very interested in doing, the one I'm most interested in here is, again, these videos are geared more toward the next trading day. This one in particular, we're looking at Monday, right? So the short term, I want to know what is the shortest term, or what are the shortest term speculators up to here? How are they positioning themselves? And if we look, the 0 to 20 delta range, those are those far out of the money calls and puts. On average, those are going to be a much shorter expiration than, say, the deep in the money 81 to 100 delta range. So in that short term 0 to 20 delta range, we had 666,000 calls and 313,000 puts. That's more than double the call bias compared to the put bias in that 0 to 20 delta range. But listen, as always, make sure that your risk is managed because, of course, the chain is just one factor of many and they can, of course, be wrong. Listen, if you're looking to try to expedite your process of becoming a trader, whether that be, I don't know if your aspiration is to go full-time, part-time, side hustle, whatever it may be, take a look at all the resource options that, we offer in the Roensch Capital Gold server. It's going to be at the link in the pinned comment. I appreciate you guys, and I'll see you in the next one.